Okay, I think we're rolling. I'm Tim Warlow with the Countdown Realty team at Keller Williams, and I just wanted to bring a quick little video and demonstrate how the difference in 1% interest will make over the life of a loan and why it's driving our market so heavily. So right now we're seeing a huge insurgence of buyers coming from basically every part of the market, and primarily because it is incredibly easy to get a very low rate right now on your loan. For the people who have reasonable credit scores, they have increased those limits on everybody, but for the most part, people who were ready to buy early in the year are now saving thousands and thousands of dollars just because of a decrease in their market rate. Our markets have never seen an interest rate below 3% on a 30-year fixed note. Now, you used to be able to get one of those on 15-year, but that would always increase your monthly payment quite a bit. So now at 2.8% interest, we're seeing loans between like the mid twos to the mid threes on a regular basis. People with really good credit right at like 2.75. So a lot of money to be saved and to be had. So I'm just going to demonstrate real quick. I did a couple of mortgage calculators, and all I changed was the interest rate. And so we're going off of a $250,000 house just to keep it round and even. The higher the value of the house, the more savings you actually get in terms of a 1% interest rate in total savings. So do a 20% down payment. Not everybody has to do that. I'm buying a house right now, 5% down, still getting a 2.85% rate. So great loan products out there. I put the first one at I put one at 3%, and then I put one at 4%. Got a 30-year term. Most people are doing 30-year terms, though if you do a 15-year, you may save another half a point on that. Average things, property taxes per year on $250,000 are probably more like $5,000, $6,000 a year. Up in Kendall County and Bexar County is probably like $8,000. The taxes over there are just getting out of hand. The PMI, if you do 20% down, you don't have to pay PMI, but if you do less, you do have to pay a percentage in mortgage insurance, and it's anywhere from $75, $80 to $100, $200, depending on how big your loan is. Then home insurance a year, just got a quote on my $250,000 house, was right at $1,000 for a year. Then we compare the loans. So the first loan here that we're going to look at is one with a 4% interest rate, which just 6 months ago was pretty reasonable, pretty good. It was easy to get. So what you're going to see is all of that data here reflects the mortgage payment. So if you had to pay PMI, if you were put down a little bit less, and you did have to pay like half a point of PMI, your mortgage payment would be $1,529. Not bad, still better than rent on a property that probably would cost less than $250,000. Our markets rents have gone up quite a bit, and we're seeing that $1,500 a month mortgage is a very reasonable amount to spend. So if you were to put 20% down, you wouldn't have to worry about this. Your monthly payment would be $1,429 a month. That's with the 4%. Your PMI is about $100. If you did the 20% down, you wouldn't have to do that, so you'd be paying $1,429 a month. Total interest paid when your loan has been fully paid in 2050, you will have paid $172,000 in interest. That's lower tax rate, everything like that, tax paid, homeowners insurance paid, $30,000. So the total of those payments right here, $54,186 for that $250,000 house. So interest adds up. What does that mean? That means you pay close to and over double what the home value is if you keep a loan for 30 years. You will have paid double the purchase price. $524,000 over the life of 30 years. Now let's look at going 1% lower on that rate to 4% and see how that affects everything. So $250,000, same scenario. Your monthly payment, even with PMI at 3%, is going to be $1,395. So $120 lower just from the interest. And after 87 months, because you will actually accrue more, you will have paid off more, so it takes shorter to get to 20% equity. Your payment would be $1,295. So instead of $1,529 down to $1,429, you're looking at a payment of just under $1,300. Total PMI paid would be $8,700. Down payment amount $50, $20%. Everything like that stays the same. Here's the big difference. Total interest paid $124,000. Let's go back versus $172,000. So 1% difference in interest over 30 years adds up to a savings of over $50,000. That's free money. That is the exact same, that's literally free money that doesn't come out of your pocket. And that's the equivalent of 1 year's salary. For a lot of people, that's probably pretty close to the median income. So imagine not having to work for one extra year. That's why everybody's so driven right now to buy a house. Let's double that. Like if you were buying a $500,000 house, which even in our market is not, it is getting up there in price, but it's not like the most substantial price point. At $500,000, you basically double that, and now you've saved $100,000 over the life of that loan. Your payment is $200 lower per month or $300 lower per month. So there's a lot of reasons that interest rates drive the market, because it makes everything more affordable. Now we have two issues right now. Is that the inventory is very low, and the number of buyers out there is rising. So what we're seeing is price points have not come down, even though maybe there's fewer buyers than there were, but we haven't seen the price points come down at all since the beginning of the year where we are. This is because more and more people keep qualifying and coming in to buy houses, and people aren't listing their houses quickly enough to meet the demand. A lot of people want more space right now. They want an office, they want a pool, they want to be able to entertain from their house. So those things are important to people. That value has increased for those items, primarily because of quarantine, and then also because of lower interest rates are driving the market. So if you have any questions about how that works, let me know. Happy to answer them for you. So you can reach me at 210-818-9457 or hit me up on social media. Follow me on every place imaginable, because I try my best to stay in front of my people and help make sure that they know what's going on. Thank you guys, and have a great day.